Welcome, everyone. Today, we'll be discussing the difference between investment consultancy and investment management. The goal is to provide real-life examples of what the two different verticals of finance imply in terms of job, what are the key differences and similarities, but also the reasons to like and to like less the two different types of jobs. So welcome all. We will start now with an introduction of our speakers. I'll hand over to Anastasia first to give a brief introduction about her background, her career, and her current position.
Thanks, Sofian. Hi, everyone. Good evening to you. My name is Anastasia Guha. I am the Global Head of Sustainable Investment at Reddington. Reddington is an investment consulting firm which is based out of London and covers clients mostly in the UK, but also in Europe, especially Northern Europe, in the Nordic markets, in Germany, and in the Dutch markets. As an investment consultant, we call it assets under advisement. We have about 600 billion in assets under advisement, which means that is the asset on which we provide advice for our clients. It's my background is in sustainable investing. I've spent 10 years at the UN Principles for Responsible Investment, which is a UN-sponsored global body bringing together investors, thinking about how to think about environmental, social, and governance risks in risk management, in stewardship, and in reporting. Before that, I started my career when I was in my early 20s at Fidelity, which is an investment management company, as an equity analyst. I did that for a few years, decided I wanted to do something a little bit different, a little bit more of a generalist, and therefore joined Sustainable Investment. And with that, I'll hand back to Sophie.
Thank you, Anastasia. Federica, do you want to go next?
Yeah, sure. Thank you, Sofian. And good evening, everyone. My name is Federica Cazzaniga. I'm a portfolio manager at Partners Group, which is a global independent investment management company that it's fully dedicated to private markets, meaning that we have $135 billion assets under management as of December 2022, I guess. And this amount of money is fully invested in private companies on behalf of our clients. Our clients are global in nature, so we don't really have a geographic focus in terms of the end investors we work with. We have offices in the US, in Europe, and in Asia, and that reflects our investor base as well. The company is headquartered in Switzerland, and that's where I am based now, and that's where I'm speaking from. I started my career 10 years ago at JP Morgan. Initially, I was advising endowments and charities on their asset allocation, so more on the investment consultancy side. And then I moved over to the investment management part arm of JP Morgan, which you might know is a rather global and big institution. Then again, wanted to move into private markets. I spent 2 years at a global investment consultant. So back again to the investment consultancy world. And then last year, I joined Partners Group, where I am now fully focused on investment management. So hopefully I can offer some perspective of both worlds to you and together with the other panelists.
Thank you very much, Federica. Andrew, could you go next?
Yes, of course. Good evening, everyone. My name is Andrew O'Neill. I'm the Managing Director of the advisory business of Asset Risk Consultants in London here. We opened in London in 2015. The business itself was founded in 1995 in the Channel Islands. So we have a kind of base in Guernsey. Jersey opened a little after that, and then we took the kind of full step into the London market about 7 or 8 years ago. I started at institutional stockbroking and then joined ARC 2004. The reasons for that, I think, was that much like Anastasia said, you have an opportunity as an investment consultant to be more of a generalist. So instead of looking at 20 companies in one small sector of the UK equity market, one has a perspective of the whole gamut of opportunity doing what we do. In contrast to Anastasia, I think we tend to concentrate on the private client market, where we specialise. Assets under advisement are therefore somewhat smaller. I think we've only got 15 billion, but we're quite happy to have that.
Great, thank you very much for that. I will just give a few words about myself. So I have graduated about 3.5 years ago. I've started my career at Nomura in M&A advisory. After 2 years at Nomura, I joined a private equity firm here in London called Headway Capital Partners, investing in mid-sized companies in Europe and in the US. And I'm happy to be today with you to discuss the difference between investment consultancy, investment management, and the wider descriptions of those two verticals. So maybe we can start by trying to explain to our audience in very simple terms what you think is the difference between investment consultancy and investment management.
Sure. Well, I think when we discussed this in preparation, Anastasia, you made some excellent points, I think, regarding fiduciary responsibility and lines of responsibility between the client, the manager, and the consultant. And I wonder whether that might be a useful starting point on that.
Thanks, Andrew. Thanks for jogging my memory on that. So I think it's important to understand how many people tell owners of capital what to do. I'm sure Frederica in her time as an investment manager has said this is the right thing because this is the right market opportunity. Of course, all sorts of other investment managers would be saying the similar sorts of things, as well as other advisors you have for other parts of your book, as well as other activities like legal advice or your actuarial advice, people who tell you what your liabilities are, for instance. The difference with an investment consultant is that they're fiduciaries. What that means is the advice that they give to a client is regulated. So if they give rubbish advice, they can get sued. And what that means is that you have to be very careful about what you're saying, that what you're saying is free from conflict, it's data-driven ideally, and it's based on the best interests of the client at all times, and you're acting as an independent advisor. So you're not trying to sell a product, you're not trying to push them into a geography, you're just trying to take risk-adjusted returns and any other objectives that they may have as your starting point and work for them and them alone. So that's what being a fiduciary means. And like the asset owners who make these decisions, you could be badly affected personally if it's shown, if you're in a lawsuit and it's shown that you haven't done your job. So you have a different level of commitment to both integrity as well as thinking about the client's best interests when you're a fiduciary.
So I think that's a very concise summary. And to add to it, I think from our perspective, when we're dealing day-to-day with clients, we don't control assets. We are there to give an independent perspective. So we're not tied to any financial institution who is actually managing money. And I think that's another important distinction to bear in mind. I don't know whether Federica or Sofiane, you have a view of having been on both sides of the fence, what some of the other differences you feel might be.
Yeah, no, maybe I can add to that. And I think it is very important to stress that the point around the fiduciary responsibility that lies with investment consultants. that is definitely a big differentiator. Having said that, as an investment manager, at least the experience I've had of this job is that we also very often take a fiduciary mindset, or hopefully all the time we are called to have a fiduciary mindset, so to operate with the best interest of the end asset owner in mind. So even though we might not have that legal requirement, the experience I've had, again, it's really been that the client is the king, and their interests should always be the overarching goal in everything we do. I guess the benefit of being on the consultancy side is that you typically have in that seat a more holistic view of the end asset owner, their overall position across different asset classes, geographies, while being in the investment manager seat, you only see typically the portion of the portfolio which is allocated to you. So maybe your understanding of the client's interest might be biased or constrained by the portion of assets that you are managing on their behalf. Having said that, again, in my experience, I still remember when I was working at JP Morgan, I was investing in corporate bonds, so effectively lending money to companies. And our motto was, we are the lenders of our clients' money. And we would think in that terms every single day. So we weren't just managing a pool of money on a computer screen. We always kept in mind that ultimately we were just lending out money that was given to us in the first place by someone else. So that is definitely a very important component, which again, I keep in mind today, every day on my day-to-day job.
But in terms of formulating recommendations, you're still having a very broad view of, although you're responsible for an asset class, you still have to have a breadth of market awareness to
absolutely
to set the context of your recommendations against, I guess.
Yeah, absolutely. I mean, it's a great example nowadays. Obviously, I focus 100% of my time on private markets now. That doesn't mean that I'm not aware of what's happening in the public markets, especially equity markets, and because at the end of the day, everything is related, right? So the same dynamics, the same macroeconomic drivers nowadays reflects across type of market, asset class, geography. So absolutely, that's something I'm very grateful for. Having started on the consultancy side gave me the more generalist approach to things, where I like to be aware of everything, and that's absolutely needed, regardless of whether you're in a consultancy or investment management seat.
Thanks. That was super helpful. I just want to take a second to let our audience know that you can ask questions at any point in time. We may address them as we're speaking, or more towards the end, depending on what we're currently discussing at the point when the questions show up. So thanks for describing those two subsectors within the investment industry. Maybe we can dig more about, at a more granular level, what are your responsibilities? If you could, for example, describe a typical day, if there is one, for you, but also for people at a more junior level, that would be great.
Who should go first? Should I start?
Sure.
So as I was mentioning, I work in sustainable investing, so I'm responsible for giving advice on how to think about, for instance, portfolio construction and portfolio implementation to deal with climate, net zero targets, or stewardship targets, or any other sustainability targets you might have. So a typical day for me, I probably have some amount of client work. So the clients, and we always think as investment consultants, I don't know if Andrew will agree, of what is the exam question for the client. It's not always about what shall we do to change our portfolio. That happens once in a year, essentially. They don't constantly revisit that. unless the markets move terribly, like what happened, and maybe we should touch on it in a little while, in the UK with the gilt crisis in September of last year. When things like that happen, then you're very focused on that sort of thing. Otherwise, it's much more granular problem solving on an asset class by asset class level, or on other sort of metrics or targets or objectives that the client has that you're trying to work through their system. So typically, for instance, at the moment, I'm working with a client that's thinking about something as mundane as moving data providers. They get all of their financial data from one particular provider, and they want to branch out. And they want me to give them some advice on should they branch out, both from a cost perspective as well as data quality perspective, and which provider should they go to. So it's got nothing to do with investments. It's actually something much more practical and mundane, but actually has quite a big impact on what they do, and also a big monetary impact on their outlays, right? So that piece of work, I deal with the client, as in I go to the client, present to the committee, etc. But on a day-to-day basis this week, I have a team of 4 people who work with me. Many of them are early career professionals. They're actually going out into the market, asking all the major data providers, many of whose names you will know because they're famous financial institutions like Bloomberg and MSCI. They're asking them a set of questions. It's called a request for information. And they're going to come back with those questions, and one of them will spend a couple of hours one day, or maybe a day, to synthesize those responses into a scorecard. And we're going to make a view, once we look at that scorecard, on what advice we want to give the client, and then back it up with all the data we've got. And what's going to happen in 2 weeks' time is I'm going to go to the client and I'm going to say, this is what we did, this is our view, and these are our recommendations as a result. And that's a pretty typical sort of way we work through a project. Now, day to day, that's going to differ. Different people are going to be doing different parts of that project, but that's how that's going to work out.
Yes, I think that's a great starting point, which I can add to perhaps. I think not all of my time, given the managing director bit, is client facing, because clearly there's some business imperatives to look at as well. But the majority of my time is spent client facing. The more junior members of the team would be 100% of their time spent on client tasks. We look at the world, we contextualize things when we measure performance relative to target rates of return, inflation plus 2, 3, 4. We look at peer group comparisons through some proprietary indices that we put together in combination with our research team. And we also look at performance comparisons where it's a benchmark. So performance is a multifaceted beast, and we look at it from a number of different perspectives. And the kind of tasks that are involved, once you're establishing a portfolio, you need to have some investment guidelines and investment policy statements in place. So there's this kind of risk profiling element to that. Then you draw up the investment policy statements. We then get involved with sort of structuring as a key part of it. And then there's populating the structures. We tend to do that through delegation to having set a strategic asset allocation, which gives you the broad brush of what you should have in bonds, equities, and cash bonds, equities, and alternatives. We'll just decide what the client's risk profile is. We have 4 categories: cautious, balanced asset, steady growth, negative risk. There's an allocation attached to each of those. And we know from working with our research departments which managers have strengths in particular areas. So when we're coming to the manager selection from the identification part, then we can offer insights there too. And the final piece of it, once you've got the client up and running, if it's not just an ad hoc arrangement, is also the ongoing oversight. And that kind of, our longest client's been with us for 20 years plus. So hopefully we're saying something useful to them. The oversight is very much part of the day-to-day, and that will shade the kind of questions you face. We've got a client in Bermuda at the moment who's putting together their annual review meeting. So we have to come up with some reporting and a presentation for that. There are some associated issues regarding manager selection, all very much focused on their individual circumstances. And I think, as Anastasia will probably agree with me, over that course of time, you get to know your clients extremely well.
Thanks, Andrew. Federica, could you also let us know a bit more about your job and give us the investment management perspective?
Yeah, maybe I can share some experience from both the private markets side where I'm in nowadays, but also on the public side where I was until not long ago. They're broadly similar, but there are some differences. But more in general, if I think about my day-to-day and the way I structure my to-do list, which is always, I always fall back on, I have a blank sheet of paper at the beginning of the week, and then I divide it into two. For me, it's really portfolio activity and client activity. These are the two big buckets. So starting perhaps from the client side, client activities, this is something I normally dedicate probably 50% of my time to. And that's really a client interaction. And when I say client, it might be the end investor or even a consultant. So it might be Anastasia talking to me that day and reviewing my portfolios, my funds. So it is typically an external counterparty, be it the client, the end investor directly, or a consultant. And in that case, if it's an existing client, I might have a portfolio update, so an existing portfolio providing information about how the portfolio is doing performance-wise in terms of implementation, how many positions do we have in the portfolio, how is the diversification, how is the portfolio tracking vis-a-vis the guidelines we received by the clients, and alongside the investment policy the client might have drawn up with Andrew or Anastasia in the first place. So that is what the conversation I would have with existing clients. When it comes to prospective clients, so someone who has not given us money to manage yet, but hopefully will, in that case, my job is really to present an investment proposal or a draft investment proposal. How would I invest the client's money if I were to be entrusted with the management? And that's typically an iterative discussion, right? So I might have an initial proposal. The client might come, the prospective client might come back with feedback, and obviously, especially being Partners Group, a firm which really focuses on bespoke solutions. So trying to really design solutions that are meant to meet the client needs. In that case, I would really try to amend the overall portfolio proposal in a way that still reflects my best thinking as an investment manager, but also meet the client's objectives and guidelines.
Yes,
when it comes,
sorry.
No, absolutely.
No, I was just going to ask Anastasia. I know we have your organisation's funds within a number of the structures that we look at. In terms of establishing those positions and the sorts of names that are in there, how does that work within your group? Are you involved in the kind of picking in the stock selection or the fund selection and identifying opportunities for investment and placing trades, or is it a bit broader than that?
Sorry, are you asking me or Anastasia?
I know you. Yeah, sorry, you, Federica, and maybe Anastasia, if she's got any comments or partners as well.
Yeah. So I think it the way it is currently structured in my role at the moment. We have a Partners Group investment teams. And again, just a reminder that I'm talking about private investment in private companies, whereby Partners Group typically takes majority equity positions in companies. So you're effectively buying either an entire company or a big part of that. In that case, we have what we call investment teams. So teams whom I understand similar to it would be what Sofian does in his day-to-day job. So really understand the company and sort of decide in a sense which companies are worth the client's money, so to speak, to put it in very simple terms, and which companies which we ultimately want to own on behalf of our clients. My role as a portfolio manager is not as much as to decide which companies to buy, so to speak, but for a determined portfolio, whether that company is suitable for that portfolio. So say, for example, a client has a higher or a lower risk appetite, would a very sort of early stage company, perhaps not really cash generating yet, or maybe operating in a specific market, an emerging market perhaps, would that company be suitable for a risk-averse client? That is my decision to take. Or whether a client might want a more diversified portfolio or a less diversified one, then it's my decision whether to add or not an additional investment to that portfolio. So that is the way I operate in my current role, rather than effectively selecting the companies. And that similar experience I've had also on the public market side, by the way. Again, at the time I was at a different firm, JP Morgan, but even then we used to have like a research team, so would be employees fully focused on understanding the value of the companies, or their debt in that case, their equity or that debt. And the role of the portfolio manager would be more of one of putting together these companies in a coherent portfolio that, again, the ultimate goal would be to reflect the objectives and guidelines of the client.
And how often do you face irritating questions from consultants?
I must say, consultants are those asking the more challenging questions, but those are typically very welcome, because I as a person like to be challenged and to question myself a lot. Don't like being complacent. I recently had what we would call an investment due diligence meeting. That typically happens when investment consultants review an investment manager strategy as a potential fit for their client's portfolio. And during that conversation, I felt like I could have an open and frank conversation around the portfolio, and really appreciate all the questions that came through.
Thank you.
Thank you all for your answers. Maybe we can now explore a bit more what sort of attracts you in your current position, what kept you in the business, and what makes your job exciting. And I'll let it to you to answer that.
But why don't you start, Sofiane?
Yes, sure.
Maybe you can talk about yourself.
Yeah,
and your experience.
Yeah, thank you for returning the question. So yeah, it's been now a bit about a year and a half that I joined my current position. So as I briefly mentioned earlier, my job consists in deciding which companies to invest in, and then to execute the transaction. And we invest in what we call private equity. So it's basically companies that are not listed, that are not trading on the stock markets, to put it simply. So what I like about my job and what makes it exciting is discovering new industries. It can be very wide, in terms of range of industries and companies you get to know. I've recently worked on a transaction that consists in a studio, for example, in Germany. So that's a space I didn't know anything about. And as you carry on what we call due diligence, this is the process that consists in reading about the company, reading its financials, its business plan, understanding the industry, etc. Throughout that transaction, for example, I went from knowing nothing about a particular industry to knowing the new trends, and how all the ecosystem around TV studios worked. So I find that fascinating. And in addition to that, to the pure, let's say, analytic side of things, I very much enjoy the people that work in the industry and the type of interactions we have. So you get through during the due diligence process, you get to learn about the management, so the team that heads the company that you are assessing an investment in. And I find it great to be able to talk to people that are passionate about what they do, that have been in the industry for decades, and that are super motivated to take their company to the next level. So that's a second aspect to it, that outside the pure analytical side, that more sort of relationship based side that I really like. Yeah. How about you? Say, Andrew.
Yeah, I touched on the generalist nature of the role earlier on, and I think that's a key part of keeping it interesting. And I started working in 1990. I mean, not a bar. I mean, since 2004. So I tended to work at fairly long periods of time in the companies I've been involved in. Yeah, so having an interesting job is a key part of it. And with investment consultancy, it's very much that generalist element where that comes in. I think the other two main parts relate to social interaction, human interaction. I mean, not all clients are an easy client, but in general, we get on very well with them and enjoy working with them. So if you're a people person, it's that aspect of the role is an important one too. The other part of it, you could say, is this whole kind of arena of problem solving. The issues that you face very much in response to questions that are raised, quite tricky questions sometimes, by the people that you're dealing with, and wrestling with those and finding a way through, turning the numbers into an actionable recommendation. I think that's a key part of the interest for most of the people within our organisation, as well. And I guess, Anastasia, you'll probably share a lot of that sentiment with me, I guess.
Yes, I think that's right. I was just thinking whilst you, Stefan and Andrew, was speaking, I've not been an investment consultant for long. I've been an investment consultant for 18 months, and I can tell you why I joined to do this. And it was because if you think of the financial intermediation chain, the top of that chain is, I work for institutional capital. That is, it could be private capital as well, like Andrew does, but that capital is at the very top of the chain. They are the ultimate clients. From them come the investment managers, and all that comes through that intermediation chain. When I worked in other parts of the business, going to a trustee meeting and helping them to decide something was like the holy grail, because this is where people decide whether to go into private markets, which manager to go into, how much to allocate to them, how to monitor them, how to decide whether they've done a good job for you. I mean, this is where the rubber hits the road. So from an impact perspective, if you care about impact, the impact, your personal impact, the impact of your work, to me, this is an incredibly impactful job. And if you think of what I do specifically, I do sustainable investing. And really what that is are you stewarding your assets in a way that's heading to the transition that we're seeing? Are you allocating to financing new transition? So financing new, specifically private markets, for instance, but also public, to actually the industries of the future and what we need to see. I personally, every time that, even though I don't have an axe to grind, I'm supposed to be totally neutral. What I mean, when we've set a net zero target and we actually do something to achieve that net zero target, it gives me a huge sense of purpose and makes me personally feel very gratified, because it's exactly what everyone wants to do, and I'm in the room trying to help the final client do it, essentially. So that's one thing. So there's purpose. Like with Andrew, and I won't go on about this because he articulated it really well, it's the intellectual side of things. These are very smart people you work with. You work together across different fields, at different types of endeavors to problem solve for clients. And as Andrew was saying, some of those questions are really tricky. I really enjoy that. You have to be a generalist. You have to know quite a bit about quite a bit, which I personally find. So if you're a naturally curious person, this is a great job to have. And by the way, I think that's probably true from the investment management side as well, perhaps even more so. And then finally, the sort of aspect of the people. You know, you typically, again, as a consultant, I'd be talking to people like Frederica all the time. I'd be talking to the clients. I'd be talking to their stakeholders. I'd be talking to the industry. And that just puts you, if you are the sort of person, which I was, who likes to be at the heart of things, who likes to feel like they have access to different parts, you know, it's not like, you know, we can talk to the investment managers, we can talk to our peers, we can talk to everyone, then it's a pretty cool place to be.
Thanks, Anastasia. And I see you touched upon also the sort of the meaning that you see in the job, which was my next question, actually. So thanks a lot for that. Federica, do you want to go next?
Yeah, actually, I would have mentioned it myself, right? What keeps me motivated is really a meaning I see in my job, the impact I have, to use the word Anastasia use, and I could echo pretty much everything she and Andrew just mentioned. What motivates me is seeing results and seeing a meaning in what I do. And probably it's not by coincidence that at Partners Group we say we are responsible for dreams, and that means that the dreams of the entrepreneurs, the companies we invest in, ultimately providing capital to help grow, scale, expand in new markets, in new products, but also the dreams of our end asset owners, which very often are, for example, pension funds. So eventually paying out for the retirement of many of us, our families and friends. So being in this part of the sort of investment chain really helps me to see the impact I can make when I allocate capital. So what I can achieve when I invest in a company that, for example, is helping fighting climate change by directly capturing CO2 from the air. Like I see what that means if I give them capital to grow and scale their business. But I also see the impact of generating returns again to fulfill the objectives of the end investor.
Thanks. That was super helpful. And we touched a bit upon it as well. But my next question is, what, in your opinion, are the quality traits, the personality traits, or sort of, you know, skills that people in your roles typically have? If you could discuss that, that would be great.
Shall I kick that one off? It's a fascinating question because it touches on aspects of team building and people management, and the way we've handled it is to recognise that actually there's all sorts of people out there, and we've used personality profiling to identify the kind of dominant traits in the people around us as colleagues, and where we can, it's not a science, it's an art. Structure the team around those kinds of qualities. So clearly, you know, we can have very bright people who are perhaps not as strong on the social side. I think there are roles for them. If you're a bit more of a people person, then there's roles for you. What we're trying to do, it is a challenge because, well, you can't keep everybody happy all the time, but you can, I think, play to strengths, and using those personality analysis tools, one, I think, can build a team that is as strong as it can be. It's a bit of a broader answer perhaps than than you might have expected. But does that make sense?
Yeah, absolutely. Anastasia, do you want to go next?
So I'm going to be. I agree with Andrew. I'm going to be practical and say, it's you don't have to have a degree in business or economics or finance, but you have to be numerate. A lot of what you're doing is making sure that the numbers that Frederica are giving you about performance and attribution and all of that are correct. So, you're not going to be, it's investment management and investment consulting requires the same numeracy skill set. And most investment consultants will have some sort of professional degree, regardless of what they've done. So you could come to it with history and English. Once you join, the firms will typically help you by paying for it and giving you study leave, will help you to do either a chartered financial analyst a certification or an actuarial certification. Often in one or the other, just to make sure that your numeracy skills are up to scratch, and that you can understand a model and build a model just like the investment managers can. Having said that, I think the other things is that you have to really want to think about macro problem solving. I think I used to be, I trained as an investment analyst and I see the difference in the skill set as there I was expected to learn a lot about a thing and to be able to articulate sort of an argument. Here, I think it's more structured. The thinking is more structured. So the firm will have a view on how to do asset allocation. Every single time you do asset allocation or every time you start to think about risk management or objective setting, there's a template. And then what you have to do is take every client through it, making sure that, of course, there's a client filter, i.e., this is for the client, but there's a house view. And that's what differentiates, for instance, one consultant from another consultant. That's what people have bought. They've bought a house view. And of course, that's the same for investment management as well. So you have to be structured. You can't just go off on one, basically. You can be creative within that space. And the final thing I would say is you really have to be able to persuade. Now, I think that there's sales that, for instance, Frederica, part of her job is to make sure that people think her funds are very, very good and want to invest in them. This is a bit different in investment consulting because you're an independent advisor. You're not trying to get them to go for this or that in terms of products. What you're trying to do is give them a sense of how much risk to take, how much liquidity to have. These are actually much harder things to do because there will be committees that are just risk takers naturally, but they shouldn't be. They don't need to be. They need to take risk off the table, even though all of them just want to go into highly illiquid assets like the ones that you, Safane and Frederica come up with. But sometimes the consultant's job is to pull them back and say, no, you don't need to do that right now. I know it's exciting and fun, but you don't need that kind of risk. You've got the returns you require. So the sales skills and the sort of speaking skills are heavily weighted towards persuasion. And some of that is to do with, looking competent and being credible, but some of that is very soft skills and knowing how to talk to people because you're getting them to let go of deeply held views and beliefs sometimes for their own good or for the greater good of their beneficiaries, which is a little bit different in investment consulting. And this is why senior people tend to do the client management whilst the earlier career professionals sit in on it. And within 5, 6, 7 years, I've seen people absolutely fly and be able to do that sort of thing by themselves. And, running a client meeting actually is hard work. And it's amazing to see how young people take 5, 6 years, but within that time are really able to control that room and take them to the outcomes you want to see and not people going off on one, which is slightly different, I think, perhaps from what I did in investment management.
Thanks, Anastasia. It was super helpful. Federica, can you hear your perspective too?
Yeah, sure. I think the answers were very comprehensive already. So I fear there's not too much I can add. I totally echo what Anastasia just mentioned on all the aspects. Perhaps the one point would be attitude. attitude is extremely important. This is a people's business. At the end of the day, there are numbers, and numeracy skills are paramount, but you're going to interact with colleagues day in and day out, with end investors day in and day out, with consultants, with investment managers, with service providers. You're going to interact with a lot of people. It's not just going to be you and a computer in a room. So be proactive, be positive, smile, raise your hand, ask questions, be eager to learn and to imitate other people, question them, even challenge them, but build a constructive relationship. So that kind of attitude, I find it's very very important. It's only by that being proactive and curious, open-minded, that keeps the whole investment world going.
Yes, I think looking back at it from my point of view, the early stage is much. It's getting the professional qualification, perhaps putting the longer hours in. I think generally we're fairly long hours in, but you might call the junior level. I think there's an expectation that that might impinge on the work-life balance early on in your career, but it's an investment for your future. And I think that's a kind of one of the attitude that Federica is alluding to. Being keen and accommodating is absolutely crucial.
I wonder if I could just come in on that, Safine, talking to what Andrew was saying. Currently, what I'm finding is a lot of my, not a lot, but I would say about 30% of the teams that I work with on a regular basis are Gen Zs. And one of the things that we have struggled with as a firm is that old attitude of, which I certainly was drilled into me, and I grew up with that, was you put in the hard hours, and then, you get to later in life, and when you have different goals in your life, you might have a family, etc., things get easier. And that was true for me. What I'm finding with Gen Z, and what we found as a firm, is that doesn't work. So you get these Gen Zs who are like, no, I don't want to wait till my 30s. And we as an investment consulting business have had to think about that. And what we are now doing is we're tracking. So what we're doing is we're saying that the hours are going to have to be thought through in terms of peaks and troughs. And we have to track, and we track this now, numbers of people, we track the peaks and troughs of every single person in the client teams, to make sure that there isn't, because sometimes what happens is you are in a particularly successful client team that's doing a lot of work for the client, and you just have a much heavier year than other people. And so what we are doing is we are actually changing the structure of how we work completely to make sure that everyone's peaks and troughs are equitable, especially in certain, in the early career bands. And so as an industry, I think this is something that, for those on the call, this is something I think you should all agitate for this change, because we don't have to wait till our 30s to live our lives, right? So I think that that change is going to come, especially if you agitate for it.
Yes, I think the coronavirus pandemic threw some of that into relief, didn't it?
Thanks. I see we have received a question from someone asking which models are beneficial to know as a person that wants to start their career and prepare for an interview. I just wanted to, so that's a very good question. I just wanted to give the, to follow up on that and to ask that person to just specify if they have already an idea of which area they're interested in, whether it's, maybe public markets, private markets, or that would be super helpful to be able to answer that question, because it depends quite a fair bit. But Federica, I see you unmuted yourself. Do you have?
Yeah, maybe just to give the answer, the time to this person to quickly answer in the chat if they want to do so. Yeah, more background would be helpful. But I think in general, what I found, at least in my experience, is that different firms tend to use different tools or systems. So yes, of course, there are sort of standardized model, for example, to value a company. That the valuation methodologies are similar across companies, so across investment firms, hopefully. But I would again focus more on the attitude and willingness to learn coming into the job. So hit the ground running, put in the time to understand the tools and the models and the systems used by the company you're in at that moment, because they might differ from another from the ones used in another investment firm. So just my 2 cents without knowing more about the background of the question.
Yeah. I just saw the answer, so maybe I can provide an answer too on that. I think the most famous valuation methodologies, you can find them on the internet. If you Google that, you'll hear about a discounted cash flow method, trading comparables, and transaction comparables for people that work in the corporate finance industry. So with respect to other parts of the industry, I'm not entirely sure, but I know that those are widely used and also tested in interviews. So that's great if you already know about this when coming to an interview.
Sophia, could I butt in as well? I'm just looking at the question on preparing for interviews, particularly on the technical side. Well, a great starting point is a company website. And if you are a kind of numbers-oriented company, usually they're not shy to advertise that and put intelligence about what they're doing up onto the website. So there's quite a lot you can find out just by doing very, very simple searches and coming to an interview with an organization where you clearly spend some time finding out about what it is they do. I think it reflects very well on people.
Yeah, thanks, Andrew. I just wanted to I think we have time for another couple of questions before I hand it over to Vicky. So my next question to you, Andrew, Anastasia, and Federica, is which question do you think is worth choosing for the remaining sort of 5 minutes or so? What is it that you would like to say that you haven't had a chance to say yet to our audience?
Well, looking back at the preparatory notes, you asked a question about what excites us less about or roles, which we haven't really touched on. I think it's never going to be all bright and shiny all the time, is it? I think on the kind of from our perspective, my perspective personally, I mean, the administration is not a great strength. I don't know what other people feel about their own experiences with what they do.
You can go, Anastasia.
Go ahead, Frederica. I'll wait for you.
Yeah, for me, it's I would say difficult. I wouldn't say excites me less, but I think client interaction is always a double-edged sword, in a sense. Obviously, again, as I mentioned, there's a positive aspect of having a positive impact on end investors' results, but also what stresses me out or sort of what keeps me up at night is when I have to have tough client conversations, or perhaps, as Anastasia said, like trying to persuade them one way or the other, and that is something that I guess you gain with experience. So I'm in a better position now than I was a few years ago. But if I have to look at an area where I less look forward to those kind of difficult conversations with clients, let's say.
I think I'd echo both the admin point as well as the tricky clients point. But I think for me personally, I would also add, problem solving sounds exciting, but you can fail sometimes. And the client's not happy with what you've said because it doesn't give them what they needed. And that's not unusual. It's not like that never happens. It happens, especially in my field, which is very new, where we don't have 20 years of past performance and understanding. It's not, trading investment grade bonds. This is very different stuff where norms and regulations and practices are changing all the time. So sometimes what we've said to a client literally is out of date 4 months later. And you have to go back to the client and said, ooh, we have to redo this. I've had I'll give you a very live example, spent a lot of time last year with a large public pension scheme that had quite a large growth sleeve. So lots of liquid assets that are traded on a daily basis, typically equities. And they wanted to think about how to put net zero thinking into that. And we worked out what I was really proud of, very data-driven model for them, and in terms of strategy and how we were going to deploy it. And we did all this. And then the gilt crisis happened and they needed to sell assets to keep their margins, and the whole thing got sold. So, my all the work down the drain. And I have to say I nearly cried. But you just have those days, and you just have to tough it out and move on, so that you can have client fails as well as client wins.
Thanks, Anastasia. I think on my end, I can also relate to this. I think sometimes projects don't go until the very end, and when you spend a lot of work, you're involved in the project, super interested in taking it to the end. Some things can happen outside of your control that make the project to fall apart. And when you've been working on it for a few weeks or maybe a few months, it can be obviously quite disappointing. Although I would caveat that you probably have learned something that will be useful for similar projects that may come up in the future. So this is obviously not a time wasted. I will now thank our panelists and hand it over to Vicky for closing remarks. Thank you all.
Thank you, Sofiane. I just really want to say a huge thank you to our speakers. Thank you for all your time and your experiences that you shared with us. It's invaluable to our students. We hope you've all learnt a lot from this. Thank you for being here, for listening, for asking good questions. And yes, again, thank you to our speakers. We couldn't do this without you. Hopefully you can all come back and do something else with us soon, because it's been great having you. To all our students, please follow us on social media. We're on Instagram @GirlsAreInvestors. We're on Twitter, @RInvestors. And you can find all the upcoming events. We've got quite a few more coming up for this spring term on our website, www.gameuk.org. And hope to see you all soon as well on the future events.
Vicky, can I just ask one quick question?
Of course.
If anybody does have a question for any of the panelists, you can coordinate those coming through to us if they're there, yeah?
If our panelists are happy to, then yes, please, if you do have any questions, send them to me and I'll forward them on and communicate the responses back to you. That's really nice. Thank you for offering that, Andrew. So yes, thank you all. Really appreciate your time and have good evenings for the rest of your evening.
Thank you very much, everyone. Thank you, Vicky, for organizing, and everyone for joining.
Thank you.
Thanks,
very much.
everyone.
Bye-bye.
Have a good evening. Bye-bye.
Bye. Bye.